In yesterday's podcast, we warned that the employment report tends to be a market-moving event, and we did see this today. It is Friday, March the 7th, and it is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, share it with friends, family, and colleagues. But let's dig into what we saw today and why the market has whipsawed back and forth throughout the day. So we got our monthly employment report, and what we saw was that the job gains for the month weren't bad. 151,000 private payrolls. The expectation was for 160,000, so that's marginal. That's not what concerned the market and why we spent most of the day with equities in the red. What we saw was a small uptick in the unemployment rate, so it went from 4% to 4.1. That concerned investors. And then when you look at something like the underemployment rate is a rate that measures those people that would like to work full-time but are working part-time for economic reasons. And that saw the biggest jump we've seen since April of 2020 when we were in the depths of the pandemic. And even though it may look like a small blip, it's actually the highest level that we've seen since October of 2021 at 8%. Some of the other details of this report were that the hours worked declined. So that means that companies are having their employees work less. This tends to be a leading indicator of what we may see for the unemployment rate in the future. The other areas that we look at was on what does it mean on the inflation side, that wage pressure. We saw that wages were relatively contained. We saw a 0.3% increase for the month, which brought the year-over-year level at 4%, slightly higher than last month, but below the expectation of 4.1. So that was welcome news for the Fed. The biggest question is, what does that mean for the Fed? Why did the market turn around so much today? Well, the Fed is meeting again in a couple weeks. Right now, the expectation is the Fed won't do anything at the meeting. But the concern is that they're stuck in a situation where they can't do anything and the labor market is deteriorating rapidly. But later this afternoon, Chairman Powell came out and reaffirmed that he still believes that the economy is on solid ground. The labor market is okay. So that eased some of the concern, and we saw the markets turn back around. The next big thing to pay attention to will be next week's inflation data. This is what the Fed's going to be looking at before they come forward with their meeting. So we have CPI and PPI both next week, and the week will round out with the confidence number for the preliminary reading for March. That's all we have. If you'd like to see a history of our podcast, please go to marketswithmegan.fm. Thank you.